Hey everyone, welcome to another update on the uranium complex. We'll be covering our usual three assets, which are 4Us, UUUU, which is the Energy Fuels Incorporated stock, URNM, which is the Sprott Uranium ETF, and of course URA, which is the global X Uranium ETF. The charts that I'll be going over will be available in the description below, so check out the links down there. This is, of course, our close-up chart, 15-minute view on the 4Us, and we had a much fuller looking complete bottom in our last update. We've had a bounce, but the bounce is a little sketchy, to put it lightly. When we look at the internal structure that we've had off of our bottom, this looks like a clear through wave pattern, and this fourth wave down has overlapped the top of the first. So at best, this could be some kind of a leading diagonal formation off the bottom. So it's not the most bullish pattern, but if we get a higher high above our top that we hit on July 20th, that could give us 5 up. So at best, leading diagonal, the impulse has been invalidated. The alternate is that this is an ABC up with a little lower to go. Now, this is just UUUU. When we look at URNM, we have a similar formation, although we haven't overlapped quite as deeply on this latest pullback. So this could still be a 1, 2, 3, and a relatively standard fourth wave pullback with perhaps a fifth wave to come. And finally, when we look at URA, this is a little bit stranger than the other two. You could call this a 1, 2, 3, and a 4. So if we can turn around, reverse sharply, and get that fifth wave up, there's a chance we could have possibly a leading diagonal in UUU, while we have a proper impulse in URNM, URA. And this also kind of validates why we look at all three of these securities together, because if you have that much bullishness, even though the 4Us may not have an impulse, that could still be a good sign overall. So we would need to see this thing break back out. Otherwise, we may see our lower low. To get a better feel for the context, let's look at our big picture chart. This has not really changed too much in a while, as we were looking for a dip. Just to reiterate, we did have our top in November, and this is one of those asset classes that warned us of this really long pullback, well ahead of most of everything else. We've seen similar follow through in the stock market, every major index, as well as the crypto space and the bond market. We've seen pullbacks. Many of these had a peak that came later, but uranium gave us the clearest indication that there was much more downside to come. And this is sufficient to be a completed bottoming pattern. Fourth waves are generally sideways. They have an Elliott wave flat kind of structure. That's what we're seeing here. You have an A, B wave, and a C wave, with the C wave not going too much lower than our previous A wave. Ideally, we could have gone a little bit lower without invalidating our upside structure. I think I just mentioned fourth wave. Sometimes you'll see this in a second wave as well. I think there's some debate as to whether it's actually a fourth or a second wave. My primary pattern does call this a second wave pullback, which is the more bullish of our alternatives. This is basically giving us some bottoming signs. So again, we have our MACD divergence. You can see how we were very stretched at this bottom that we hit back in early May, and we haven't had it go as low in our subsequent lower lows. That's a good bottoming sign. But you can also see that this could be some kind of a 3, 4, and a 5. Maybe we have a slightly lower low to go, possibly touching about where this red line is, 434, possibly a little lower than that. We need to see a little bit more development before we can be certain, or at least be confident about what to expect next. This is in the same situation. We have an MACD divergence in the URNM ETF, in which we're rallying. It looks a little bit more convincing here. This does look more like a 1, 2, 3, possibly a fourth wave in progress in a more impulsive setup. And when we look at URA, same thing. This actually did hit our ideal retracement box for this deeper second wave. So this is giving the strongest sign, again, URA, the global X Uranium ETF, that we're ready to turn around and give ourselves a rally. Now, before I go on to what we're expecting next and how to invest, if you are looking to accumulate positions, I'm going to touch on the ES mini futures, which represents the S&P 500. And we've seen kind of a, how do I put it, ambiguous rally. Things are pointing at us having continued upside, but we haven't had impulsive upside movement. So really, we've seen an ABC pattern up and a very deep retrace. So this best counts as a big A and a B, and we're very likely completing some kind of a C wave. Now, this could lead to some danger in the near term once we do finish this rally, if we finish this rally, because when you have an A, B, C off the bottom, that could be a setup for some further downside. So we can't rule that out, but there's a much greater likelihood that this action A, B, C first wave of a larger leading diagonal. That is a topic for another time. Point being that we do have bullishness in different asset classes, but a lot of it's not looking impulsive. The cryptos are in a similar posture as well, although a lot of those actually do look like they have impulsive 5-wave setups to the upside. So now, key question, what to do now? If you've been holding your uranium holdings all this time, whether it's any of these assets or anything else, probably better just to keep holding. There's no reason to sell right now. We don't have a strong setup for more downside. And if we did go down a little bit more, wouldn't be too much further to go down. We're seeing the same kind of action across many of our asset classes. We should expect some kind of rebound in, again, impulsive fashion or diagonal fashion pretty soon. So if you're looking to accumulate, I would highly suggest doing dollar cost averaging, not buying big chunks at the moment. The best time to buy a bigger chunk for your investing purposes would probably be to wait up for a bigger first wave impulse. So you want to see 5 waves up and 3 down for a second wave. This pullback will be the place to accumulate heavily if you are looking to buy more. And it will also be the setup we are looking for to give us a leveraged options play. So I'm not in any kind of leverage plays at the moment. Whether it's going to be for UUUU, URNM, or URA is yet to be seen. They all have varying liquidity and varying open interest. Not something I'm looking at right now at all. We're looking only at the chart. We need to see more of a confirmation that we've hit a bottom so far before we can go leverage long. And as I've mentioned before, if you are accumulating, probably dollar cost averaging is the best way to go. If you're holding a lot of losses, if there's a lot of red, I would say it's not a good time to panic. The long-term big picture is looking quite bullish. As we did mention, I do interpret this whole thing as a 5-wave impulse that topped in November 2021, which means that this second wave will give way to a much larger third wave. That is our primary expectation at the moment. Although I did mention that there is a chance that we have a big top and a big crash after. I have a video that talks about the everything top, in which we may see a top for pretty much every asset class sometime in 2023, whether it's the stock market, Dow, S&P 500, oil, energy, cryptos, blockchain, and even the bond market. It'll all coincide. However, the subsequent pullback will very likely be a more shallow second wave, as you see here with these capital Roman numerals, while the stock market and other asset classes may be crashing into a prolonged bear market. In other words, this will be a lot like energy, oil, gasoline. We may be entering a much larger bull market period. So again, patience is a virtue here. And that's why I keep reiterating, if you're feeling really a lot of pain because you're holding a lot of this stuff and it's red and you're underwater, don't panic. The only reason I would recommend selling is if you need that money for something else. Maybe it's a down payment on a house, you're paying off debt. Debt is probably the 100% risk-free investment, get a guaranteed return, and it's always positive. So I strongly encourage paying off debts if that's what you're trying to do. Otherwise, probably better to keep holding. And it never hurts to diversify. Maybe you want to buy some other funds, whatever it is. I'll have more videos coming our way because we're going to have to watch this thing develop a little bit. As I mentioned, we do have some promising setups so far. We need to see that 5th wave up. That's what we're waiting for. If we can get our 5 up and 3 down, that might be a much more bullish sign. I'm zooming up on the 4-use chart, this purple 5-wave pattern. We need to see this materialize. Otherwise, as I mentioned, could have a lower low, but nothing to be panicked about. Subscribe so that you don't miss my updates. I'll be continuing in the uranium sector. And don't forget to give me a like if you enjoyed my video. Until next time, thank you for watching and happy trading.